Hello traders, today we're going to discuss the third Elliott wave FS trading tips. Third Elliott wave FS trading tips. Before we start this trading discussion, I would like to say to traders that I'm back to London, to my normal life. So if you have been wondering, George, why you didn't reply to my email, George, why you didn't reply to my comments, why are you not posting a 2-4 Elliott wave anymore, what has happened to you is because I went for a nice holiday, 25 days rest, and now I'm back to normal life. So I would like to thank you for your patience, and we are back to normal life, and we will be posting more videos at 2-4 Elliott Waves YouTube channel. Let's get started. Third Elliott Wave FS trading tips. In order to maximize profit in the financial market, in particular in the FS market, one should learn how to catch the third Elliott wave. The reason is the third Elliott wave is an impulse wave, which means a wave that is going in the direction of the main trend. So if a trend is underway, impulse waves will be in the direction of the price, of the trend. And usually the third Elliott wave is the longest wave during the trending phase. So to maximize profit in the financial market, one should learn how to catch the third Elliott wave. Because there is another Elliott wave rules, we have 3 specific Elliott wave rules. One of them is stating that the third Elliott wave should not be the shortest motive wave. Therefore, it's not going to be the shortest motive wave in the direction of the trend, and very often it's also the longest impulse wave. Therefore, to maximize profit in the financial market, one should learn how to trade the third Elliott wave. Let's start our discussion about the third Elliott wave FS trading tips. The financial instrument that we are looking at is the Euro New Zealand dollar. All right, the Euro New Zealand dollar is positively correlated to the Euro US dollar. Why? Because if you are trading Forex, you should understand the correlation between currency pair. So the leading currency pair is the Euro dollar, and any currency pair that is positively correlated to the Euro dollar will go up together with the Euro dollar and will go down with the Euro dollar, with a few exceptions. I've already posted a video about currencies correlations at 2-4 Forex Trader YouTube channel. So if you don't know what is a currency correlation, I recommend that you watch the video about currency correlations at 2-4 Digit 2 Digit 4 Forex Trader YouTube channel. This video is about Elliott wave principle and will be posted at 2-4 Elliott Waves YouTube channel. So we're going to start counting waves. So in order to catch the third Elliott wave, one should be able to identify first the first wave and the second wave. And once we identify the first and the second wave, we are now ready to identify, the third Elliott wave. But there are a few things I want to clarify with you today, talking about third Elliott wave FS trading tips. All right. The first thing that you need to understand, which a lot of traders tend to forget very often, is that there won't be any third Elliott wave if the fundamentals are not solid. There won't be any third Elliott wave if the market environment is not viable. You may count the first wave and the second wave. You will be expecting the third Elliott wave, but if the fundamentals are not solid and we are in a crazy market environment, we will not see that third Elliott wave. This is essential for all traders that want to catch the third Elliott waves. The next thing I want to say to you, in order to count the first wave, here we want to talk about the bullish first wave. The bullish first wave usually takes place at the end of a downtrend. So looking at this chart, I can see that the Euro New Zealand dollar have been going down since 2009 up to 2015, beginning of 2015. It was bearish. It stays below this red bearish trend line. But suddenly, after this bearish move was in place, the price formed a double bottom chart pattern. Can you see a double bottom chart pattern here? Maybe not. I will show you, because a lot of traders find it a bit difficult to recognize a double bottom chart pattern when the second low is lower than the first low. For many traders, when we are talking about double bottom chart pattern, they are thinking of equal low double bottom chart pattern. There are double bottom chart pattern with a low that is lower than the first low. So this is the case here. So we have this low here, and the second low is here. Why is it a double bottom chart pattern? It is a double bottom chart pattern because the price goes above the prior high. The prior high for this currency pair, which is this one here, is at 150.03. It's a very important level if one is trading a key support level for the Euro New Zealand dollar. So price did below 150.03, but because it closed above the prior low, it becomes a double bottom chart pattern. All right, here it is. So price was going down, going down, going down. Now it formed a double bottom chart pattern. After this candle is formed right here, the price did close above the prior low. Therefore, we can think of a double bottom chart pattern after this candle here is closed. So now we can start counting Elliott wave, and here it is. The first Elliott wave is this one here, from here to here. So I will call it. I just want you to follow me because. Okay, let's zoom into it. So the first Elliott wave for the Euro New Zealand dollar on this monthly chart is this price action from here to here. So when we are counting Elliott wave, one more thing we need to understand, as I mentioned before, is that the Elliott wave count is dynamic. So you may see sometime a professional will post a video on YouTube, and trader will make some comment and say, oh, this is a useless Elliott wave count, this is a wrong Elliott wave count, mark it down. But the wave count is dynamic. As we are counting wave, we are following the price. And if the market, the price structure has changed, we will restart counting wave. So one may say today, oh, your wave count is wrong. But tomorrow one may notice that the price structure has changed. Therefore, we must restart counting wave, or we must re-examine our preliminary wave count. So this is my preliminary wave count for the Euro New Zealand dollar. Maybe after a few weeks, we may see that the price may continue to go down. If, for instance, I'm calling this now the first Elliott wave, but if, for instance, the second wave, which is this one here, you see the triangle here, this is the second wave from here down to where the price is now. Can you see on my chart? Too many lines, so probably I should use the pink line so you can see on the chart. I'll remove the first one here. So this is the first Elliott wave from here to here, and the second wave from here down to 150.03. This is my preliminary wave count, and the wave count is dynamic. The reason why I'm saying this is that do not assume that because we count the first wave and the second wave, definitely, my friend, there will be a third Elliott wave. There won't be any third Elliott wave if the fundamentals are poor and the market environment is not viable. So now we see that we have the first wave and the second wave. The Elliott wave rule stated that the second wave should not cancel, should not retrace the first wave, which means shouldn't come to the beginning, to the beginning of the first wave. If the second wave retraces completely the first wave, we must restart counting wave. All right? So as things stand now, the price now 15003. This is our second Elliott wave in our preliminary wave count. If the market environment is viable and the fundamentals start improving for the euro against the New Zealand dollar, because we are talking about currency pair and FX trading, there is a high chance that we may see the third Elliott wave here. But as I told you already, there won't be any third Elliott wave if the fundamentals are not solid. All right? Okay? So right here. The next thing, talking about third Elliott wave FX trading tips. A lot of FX traders will stop here and they will say, Joe, thank you so much. Now we can sit down and buy our call option and hope that everything works well and we get paid. The next step after we counter the second wave as it is here, we must implement, so we have the second wave at this point in time, right here. From this vertical line, we will implement a top-down trading method to enter the trade. But before we will even consider entering the trade, we must check the fundamental regarding the euro against the New Zealand dollar. So the point I was making to you at the beginning of this video, talking about the currency correlation, the euro dollar is the leading currency pair, and the euro New Zealand dollar is positively correlated to the euro New Zealand dollar. Okay? So let's go now and look at the euro dollar itself, the leading currency pair, and we will be comparing. So one of the things we do when we are talking about correlation between currency pair, we do not pay attention to the rising channel or the declining channel alone, but we also pay attention. We compare, okay, the price or the market pattern of the euro New Zealand dollar to the market pattern of the euro dollar. Okay. So that's why I recommend to you to watch that video at 24 Forex Trader YouTube channel, the currency correlation. So if you look at the euro dollar, you will see now, and that will give you a bit of idea. This is the euro dollar on the monthly chart. What's happening here? The euro dollar is stuck between these two levels here. Okay, the level of 11449, okay, and the level of 150, okay. 105 and 48, okay, 11449 and 105, okay, 58, something like that, okay. So that's where the euro is stuck between these two levels. It's consolidating. So looking at the euro dollar, which is the leading currency pair, is not a trend yet. So look back again. So if I compare this market pattern for the euro dollar, which is horizontal channel, which means no trend is yet in place, I will put a bit of question mark on my expectation for the third Elliott wave here. If the euro breaks above that, start going above that horizontal channel, then I may say that the euro dollar is about to trend, and there is a high chance that the euro New Zealand dollar also may start trending. Looking at the euro dollar, it looks to me that the market is not ready to buy the euro for long term. Looking at this this market pattern for the euro dollar, this is about the currency correlation, comparing the market pattern of one currency pair to the other that is positively correlated to it. Okay. So though I have counted my first wave and my second wave, now I'm doing few verification using my, currency correlation to see whether there is a high chance that we may see the third Elliott wave very soon, or we may wait for a while before the third Elliott wave. Another thing I need to say to you here, talking about a third Elliott wave FX trading tips, we are looking at the euro New Zealand dollar. The next thing I need to mention to you, if the euro New Zealand dollar breaks below the 15003 and continue to go down, there is a high chance that it will go back down to this level here of 13473, forming another double bottom right here. So be aware, priority to bullish signal above 15003 and priority to bearish signal below 15003. If it comes all the way to 13473, that will cancel the first wave, and we will restart counting our wave. But as it stopped at 15003, priority to bullish signal above that level, and if the fundamentals are solid for the euro, and the market is becoming very, very excited to buy the euro for a long time, there's a high chance that we may see the third area wave here. But if the market is not yet ready to buy the euro, this currency pair may continue to go down all the way to 134.73, or may consolidate between the level of 178, you see the top level here, 178.23, and the level of 150.03, which means it start going up here. You think that, oh, it's going to, the third wave is underway, and then as it reaches 178.23, and then it will start coming down, forming another consolidation, okay, consolidating between the two levels. All right. Though we have counted the first wave and the second wave, does not guarantee to us that definitely that very soon the third Elliott wave is underway. Another thing that I need to mention to you, after we have counted the first wave and the second wave, and we are now ready to enter the trade for the third Elliott wave, to catch the third Elliott wave, we must use what? A top-down trading method. A lot of Elliott wave traders can recognize the Elliott wave pattern, can perform a thorough Elliott wave analysis, but they are missing, they are losing, or they are not making any gains because they do not apply a multiple time frame trading method. So, in order to catch the third Elliott wave in a viable market environment when the fundamentals are solid, the next step is the next step is to apply a top-down trading method. So the best approach right here, after everything there, after we have counted the first and the second wave, in order to catch the third Elliott wave, we must apply a top-down trading method. So because I'm on the monthly chart right here, first wave, second wave at 15003, this is my preliminary wave count. If you cancel it, we restart counting it. If you start consolidating, okay, game on. We start, okay, we will wait again until we see a clear cut, indication that the third wave is underway. But the point I want to make to you, after you count the first and the second wave, and you are about to catch the third Elliott wave, it is compulsory that you implement a top-down trading method. Because we are on a monthly chart of the Euro New Zealand dollar, the monthly chart will be for our trading setup. The daily chart will be for our signal. Right, so on the daily chart, if I draw another trend line on my chart, look carefully, my friend. I'm connecting 2 points. And I will color that line into turquoise, okay? Here it is, the turquoise bearish line. So I'm connecting this point right here to this one here. I have a bearish turquoise line here. On the daily chart, we can see that the price breaks above that turquoise line and retests it here. The question is this the beginning of the third Elliott wave? All right, so there was a signal here, break above, retest. This is the signal on the daily chart. Traders start buying it. All right. Now, the signal does not mean buy straight away. It means that go. So monthly chart, daily chart. Now we go to the hourly time frame for the entry. So here we can see that on the hourly time frame, after the price has retested that turquoise line, forming multiple bottoms here along the turquoise line, we have the first higher low. This is another entry point. If we miss this one, we may expect the price to retest the orange trend line on the hourly time frame. See here, this trend line here. So we may expect it to pull back all the way here. That will be another entry. Or the price may retest, this level here. I don't want the video to be too long, so I will just put it here to pull back to the level of I can see it clearly here, the level of 15396, that zone. Either so as it's going now, if you are looking for an entry, a pullback near 15396, if you pull back and start changing direction and forming another higher low here, that will be another entry point, because it's hanging up here. Or we will prefer it to pull back all the way to this orange line that we have drawn, connecting this point and this point here. So this is just about a top-down trading method. The monthly chart, we see a trading setup in place, first wave, second wave. We are looking to catch the third Elliott wave. We list start. Okay, If the market environment is viable and the fundamentals are improving for the euro, we may see the third area wave. But it is essential that we use a top-down trading method, multiple time frame trading method, because the trading setup is on the monthly chart. We are an area wave trader, but an area wave trader that is not using a top-down trading method will not achieve consistent winning trade. By using a top-down trading method after the wave count, we can improve our wave count significantly. All right, so monthly chart for the training setup, daily chart for the signal, and the hourly time frame for the entry. This is about third area wave FS trading tips. If you have any question or suggestion, put in the comment section. In due course, I will be busy recording another video to answer your specific question. Warning to traders, this video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell the euro and New Zealand dollar. It's primarily for the TSTW traders. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy.